Hello and welcome to Raise Your Average. I'm Pierre Daly, managing editor at advisoranalyst.com. My co-hosts are Mike Philbrick and Rodrigo Gordillo from Resolve Asset Management Global. Our guest today is Nick Piquard, Vice President and Portfolio Manager at Horizons ETFs Management.
The views and opinions expressed in this broadcast are those of the individual guests and do not necessarily reflect the official policy or position of advisoranalyst.com or of our guests. This broadcast is meant to be for informational purposes only. Nothing discussed in this broadcast is intended to be considered as advice.
Nick, welcome to the show. It's great to have you.
Thanks for having me. It's a very interesting time right now, so there's lots to talk about.
Indeed. Yeah, excited to have this conversation. So Nick, to get things started, why don't we start with you telling us the story of your career and the arc of your career, how you got into the investment industry and ultimately into portfolio management.
Sure. It's been over 20 years now, so I'll try to make it quick. But I started in derivatives and as a quant. I studied math at Waterloo, so that 20 years ago it gave you a bit of an edge. Now you need like a triple PhD, but 20 years ago, even studying mathematics was enough to get you in the door. And I was basically a derivatives trader for the first 15 years of my career, working on the sell side, managing derivatives books and basically being an option and structured trader. But it also got me really interested in quantitative finance and in investing using quantitative methods. And I joined Horizons almost 8 years ago now, trading or managing the portfolios for their covered call portfolios. And that's using options and trying to get an extra yield for investors. But as well as part of my kind of quantitative background, I was looking for opportunities in that looked really good from a quantitative perspective. And one of the things I noticed was, if you look at sectors that have been down 70, 80, 90%, people give them up for dead and kind of forget about them. But if you start looking at them after a while, that's where you really get the opportunity to make multiple times your initial investment. And that's what got me really interested in commodities over the last few years, and in particular, uranium, which, if you looked at it a couple of years ago, it was basically down 90% from its high.
The Fukushima effect.
Yeah,
right?
Exactly.
Right. So really the Overton window seems to be passing over the whole concept of uranium and nuclear as a source of energy and electricity, and moving from sort of post Fukushima and hell no to ESG and hell yes. So maybe take us through, sort of your top down thoughts and narrative on why it's compelling today, why you perceive this as a secular change in trend that's more sustainable than some sort of shorter term impact, and walk us through the thought process and narrative there.
Yeah. So, I think to understand kind of where we're going, I think you kind of have to think about a little bit about where we've been. Before Fukushima 10 years ago, the narrative on uranium was actually, quite bullish. The Chinese were building a lot of nuclear power plants. India was also trying to catch up. So there was quite a bit of positive sentiment, and the sector was kind of set up for growth. Then, of course, Fukushima happened, and then a bunch of factors, really destroyed the sector. In the short term, obviously, with the accident and Japan shutting down all their nuclear power plants, but also the ramifications of that politically. Germany decided to do the same thing as well. There were a lot of political decisions made where even the Chinese put a lot of their construction on hold. So, the demand side got completely obliterated. Furthermore, if you look at the uranium market, a lot of that market is contracted over long periods of time. And so there were a lot of long dated contracts that were signed during the good years where, that uranium still needed to be delivered. And so Cameco, Kazatomprom, they were still building and delivering their uranium over to, the buyers didn't really need it. So that really just, inventories kept going higher, spot price just kept getting lower. And that happened over a period of basically between 2011 till about, 2018. And finally, after so many years and the contracts kind of rolling off, that's when we finally saw spot price bottom out on the uranium side. Cameco made the hard decision to shut down McArthur River, at the time the biggest mine in the world. Finally, it took that long to get the supply under control. And the other key thing was with Kazatomprom, they decided to privatize the state company. Before they were privatized, they were kind of a state producer and they were mandated to produce a certain amount of pounds. That also changed. So on the supply side, there was a lot of change that happened over the next few years. And finally, on the demand side, ESG is becoming more important. We notice climate change every day now, it seems. We get more news of just incredible heat out in Western Canada and the Western United States, but now also all these floods in Europe. It just seems like every day now we get, what seems to be the results of a wacky climate and a wacky environment. And so I think it's front and foremost for all, politicians to address that issue. And, nuclear is now resurfacing as a solution to that. And so I think, we've seen, it's a long story, but we've seen over the last 10 years, demand go down, supply go up, and we're finally at the end of this period where now supplies coming down and it's going to have a hard time catching up, and demand bottoming out and recovering.
And so, so you've got sort of the demand and supply functions coming more into balance, I suppose. What do you see are the major imbalances if we walk this forward? So we talked about the history of how we've gotten here. What's it looking like as we move out through the future here with maybe with some technology advancements in the developments of actual reactors, some of the small modular reactors? What are you seeing going on a go forward basis to tilt this supply demand equilibrium even further into the sort of bull market for uranium?
Yeah. Well, I mean, the first thing I would say there is, even if there's no new nuclear plants built today, but the ones that are being under construction, and there's about 50 under construction right now, but even if we weren't to start any new nuclear power plants, even if all the latest, potential technologies such as small modular reactors or anything like that, even if none of that were to happen, currently the market is just an imbalance. That on an annual basis, we use about 175 million pounds of uranium, and last year we only produced 120 or close to that number. Even if we recover some of that, we turn Cigar Lake back full time, the Kazakhs, start making a little bit more. It's still not enough. We're still going to be going through inventory. So even if nothing were to change, I think uranium prices need to go higher to address the supply demand imbalance over time. And people talk, well, there's nuclear power plants that are slowly shutting down. I was noticing there was news out of Belgium today that they want to shut down their nuclear power plants. But just the same, the mines that we're currently mining are getting older. I mean, Cigar Lake, I think, has a mine life until 2027, 2028. What do you do after that? So I think even if nothing changes and we keep the lights on using current nuclear, which I think that's possibly a low case scenario, we're still not going to have enough uranium. But the bull case over and beyond that is the new technologies that we're currently working on, particularly small modular reactors, which really they show potential to help decarbonize areas that are hard to decarbonize. Areas, for example, if you run a mine in in northern Canada, you don't have much access to hydro. You don't have much, and you need to burn fossil fuels, generators, and whatnot to power the camp. Well, SMRs might be a good solution for that. Or steel production and stuff where you need to requires a lot of heat. SMRs might be a solution to that. There's a lot of
what is SMR stand?
Yeah, what is that name?
Oh yeah, sorry. So SMR stands for small modular reactors, and they're not actually. People are working. There's a few companies working on them now, and they've advanced a lot over the last few years. But it's not actually very new concepts per se. They've used kind of small nuclear reactors in submarines for years to power them. At great depth so that they don't need to be refueled for a long time. So this is really just an improvement on that kind of existing technology. But it is a little bit more expensive than building the big ones, which is why, nobody's really thought about, really using these SMRs commercially. But there's a potential to use these in a more economically efficient way if you can use it in areas that are hard to decarbonize. And if the price of carbon is high enough, then these become a potential solution.
Areas that are tough to decarbonize. Can I just get a better understanding of what you mean by that?
Well, basically, getting rid of emissions, getting rid of carbon emissions, in Europe, for example, they're going to start, in Canada, they want to start putting a price on emissions, and that price is slowly going to go up and up and up and up over time in an effort to reduce them and put an economic price on them. So that means zero emission. Exactly. Mm-hmm. And so the efforts to reduce emissions is based, that's what I refer to when I say decarbonize. But, a lot of people are looking at transport, electrical vehicles and whatnot, but there's a lot of areas that are harder to do, like steel making, jet fuel, that kind of stuff.
So is it that the SMR can be put in a place where, let's say you have a high concentration of coal produced energy, which is the, sort of the natural source of energy there? Or is it that you put it near a city so that the city is not so polluted? Like, well, what's the use case? Is it like cities in China where they're having massive smog problems? So you'd slide an SMR in there rather than a coal-fired plant? Is that?
I mean, ideally the pie in the sky for those SMR companies is that, they can make them in a factory as opposed to make them on site, which is what you have to do with an existing kind of power plant because it's such a big construction. If you can make them in a factory and kind of mass produce them, reduce the cost, that, you can get to compete with other energy sources. And then it becomes kind of a modular, a modular technology where you can, if you need 5 or 6 in the city, then you give 5 or 6 in the city. The way I think a lot of, scientists or politicians or visionaries, whoever you're talking to, kind of think of this technology is, this could serve as your base load electricity that's zero emission. If you look at all the economies in the world that have successfully gone to zero emission, they've done so with a high degree of zero emission baseload energy. You look at Norway,
right?
Mostly it's hydro. They have access to a lot of hydro. Yeah. You look at Ontario, it's basically, or Quebec, it's hydro and nuclear for Ontario. If you don't have that high amount of baseload, it's very difficult to just use wind and solar to get to those levels. And Germany and California are good examples of that. I
think Nick, it pays to dig into baseload, right?
Yeah.
So the nuclear energy is always on, hydro is always on, and what baseload means versus, wind or solar, which is not always on and would require some sort of battery medium in order to provide that always on powers. Have I summarized that well?
Yeah, no, you've summarized that exactly well. So give an example, which is unfortunately the kind of negative poster boy of the world for that is Germany's attempt to decarbonize their economy by spending. When they made the decision to get out of nuclear after Fukushima, they realized that they were never going to meet their emission targets. So they spent a lot of money on a program called Energiewende in German, I think.
That's pretty good.
Love your German.
They spent all this money to building out solar and wind energy. But it's the problem with those technologies is that they're very intermittent, and so you need electricity consistently to power the economy. And when the sun's not shining and the wind's not blowing, you need to import the electricity, or you need to power up your in the case of Germany, lignite coal plants, which are massively polluting. And effectively, over the last 10 years, even despite all of the money that they've spent, has resulted in two things. A, emissions have not gone down. Emissions have not gone down at all. I think, in fact, they're up. And B, mostly not because wind and solar didn't help a little bit. They did help a little bit, but it was more than offset by the fact that they turned off nuclear. And then the second thing is they have the highest electricity prices in the world, bar a few smaller countries. So it's a very difficult, Germany is a rich country. Maybe they can afford these high electricity rates, but for the most part, it's a very challenging thing to put just wind and solar without good battery technology. And the fact of the matter is, battery technology isn't up to speed, or it's just not good enough right now to allow for that.
So it's funny. Nick, just listening to you, Nick. I don't know if you've all seen the movie Anthropocene.
No, I have not.
No, I haven't.
But there's a scene. There's a whole scene there in the movie where they show the coal mining in Germany.
Oh yeah,
and the extent of it, and they're literally tearing up the entire countryside with these like machines that are the size of buildings. They're scooping, just literally like going into a hillside and scooping out the raw material for their coal mining. And this is, like when you're watching this movie and then you realize this is Germany we're talking about. It's not India or China. That there, and then there's a scene where an entire town has had to relocate because the machines are coming and they're just tearing up the ground completely, ripping out the coal from the ground so that they can power these, power their coal burning plants.
I'm sure there's watershed issues there too.
Absolutely. And if you watch that and you listen to what Nick was just saying about, about the decision in Germany to kill nuclear, it makes, I was going to ask you was, do you see a future where Germany, goes back on its decision?
I thought they might, because, they were slated to close the second half of their nuclear power plants, next year. I think it's next year, or 2022 or 2023. They shut down half initially, and then they knew they wouldn't be able to do it all in one go, so they kind of staggered it. And I thought, the last 10 years would have been a kind of a wake-up call in the sense that, well, this is going to be very expensive, and we're burning more coal than ever. Not only that, but we're heavily reliant on France to import electricity when we don't have enough, and that's nuclear energy anyway. So I'm not too, I'm not sure what you're trying to prove, but.
Yeah, you gotta watch that movie though. Okay. Anthropocene. It's an amazing movie. I think you can order it on it.
Okay, yeah, I'll definitely make a note of that. And yeah, so I thought there was a chance that they might, and there's definitely a movement within Germany that is kind of second guessing that decision, but. In particular in the industrial regions of Germany, which rely on electricity to be competitive from a manufacturing perspective. And they've relied on government credits actually just to stay competitive from an electricity consumption point of view. But there's a very, and this is the challenge of nuclear. When you get a award-winning HBO series like Chernobyl, it's especially in the older generation that lived through 3 Mile Island and Chernobyl and now Fukushima. And you don't notice it so much in the younger generations, but there's definitely a anti-nuclear bias in Germany, and that is the one thing that nuclear needs to overcome.
So let's talk about that a little bit, because I think a lot of advisors that are considering putting high volatility, unique bets in their portfolios, people are pushing back now on ESG. And I don't think that the message that nuclear is clean energy or cleaner energy is coming through necessarily. So when I think about nuclear, I think about nuclear waste. That was what I was brought up in. Remember that big canisters in the bottom of the ocean, and a few other scenarios that power plants weren't doing so well. So how does in the hierarchy of ESG or not polluting the planet, where does nuclear really fit in 2021?
Well, I mean, I think that is definitely one of the big negatives with nuclear energy is the waste, and what do you do with that waste? For the most part, there's a couple of things with that. One of the things with existing nuclear power plants is that you enrich the uranium, you build your nuclear fuel that gets combusted into the power plant, generates electricity. But then when it comes out, when you get the waste, there's still a lot of uranium in there, and these new generation, like what Bill Gates' company, for example, is working on, is with these new generations of SMRs, they could potentially use some of that waste and burn it more completely. It's basically like if you were using coal, but you're only burning 10% of it, and then kind of couldn't really use the rest. So there's, as opposed to being a liability, there's a potential down the road, and I don't know how soon that might be, but there's a potential down the road that waste might actually be worth something, or could be consumed more completely in new kind of technology, new reactors. So there's always that possibility. But
who are the innovators in the SMR?
Well, there's a few private companies. There's no big kind of public companies. I mean, maybe I'm sure some of the bigger, companies like, Westinghouse, GE, or in South Korea, maybe they're working on it. But in the US, there's TerraPower with Bill Gates, and these are private companies. And then there's NuScale in the US as well. And both of them have pretty advanced prototypes that they're going to be building over the next few years. And Canada made some recent announcements as well that they're going to be working on kind of an SMR technology in Canada as well. So everyone's kind of working on it. It's a kind of, there's some private companies, there's some companies that are more funded directly by various government entities, and definitely there's a need for public funding in a lot of those cases. So, but part of what's happened over the past 5 years is that there's a lot more money and funding, happening in that space. There's in the U.S., the American Infrastructure Act to help nuclear energy. I forget the title of the funding, but it's a legislation that will provide funding for new research, as well as a potential national uranium reserve for the United States. They have one for oil, and they kind of realize, well, nuclear provides 20% of our electrical grid. Why do we have a reserve for oil, but we don't have a reserve for uranium? So there's definitely more and more attention being brought in to that space.
So just about prioritizing the threats, the carbon sequestration of nuclear versus the the continuation of the current paradigm of fossil fuels. So at some point you have to figure out the way to deal with the waste and use the fuel more completely, which is an ongoing technology.
I mean, one of the advantages with the
feels like, sorry, go ahead, Nick.
Sorry, I mean, I was going to say, one of the advantages with the waste is that, because of the energy density of uranium as a fuel, I was reading somewhere that even if you took out all the nuclear waste from all the power plants in the world that have been functioning for the past, 80 years now, or 70 years, and it probably amounts to, a couple football fields worth. And, stacked, I don't know, pretty, like not that high, and so it's just not that much physically, of waste. And most of the waste right now is being kept on site because, nobody wants to take the risk of moving it around for no good reason. But it doesn't take up, very much space. Of course, you want a solution for that. And I believe in Finland and France, they've decided to basically use a geological repository, which is basically a fancy name for saying they're going to put it really deep in the ground. That sounds like a silly solution, but most scientists who study this will tell you this is, as long as it's in an area where there's no seismic activity and, there's no chance of it, once you put it in there, nothing's going to happen. So,
Elon needs to figure out a way of fueling his rockets on nuclear waste and then leaving it in the moon or something. We're gonna get to Mars. We gotta get him on it.
We gotta get him working on that.
And I ask those questions. Yeah, I'll give him a shout.
I knew we could.
I'll let him. He probably hasn't thought about it yet.
Those planets.
What's interesting in the narrative?
Are there?
Sorry, Bill. Let me just give this thought. The narrative about nuclear, when I talk to people, feels to me really hasn't shifted much in 20 years. There is that the layperson continues to have a very negative view of nuclear in this weird belief that there haven't been advancements, that there haven't been ability to capture much more of the uranium energy than you could, the fact that you can recycle it and put it through the centrifuges and bring it back to life. And the waste management continues to improve as well, right? So it's one of these that we know exactly what carbon is doing to our planet, or we think we have a decent signal of what carbon is doing to our planet. I don't want to insult anybody out there who's still on the ropes, but you got to weigh the consequences of all the types of waste, all the different options from different regions, and nuclear has to be a real conversation, and the advancements need to be at the top of the list. Like I remember a client of mine 15 years ago was part of one of the companies that was telling me that the nuclear reactors that they were making were this big, and they'd go up to mining companies and say, well, drop it 30 feet, plug you in, and you're set for 15 years. And then we'll come in and switch it up for you versus having a massive amount of infrastructure. And it made so much sense back then, but he couldn't get it off the ground. So it's good to see that we're seeing a lot of that moving forward today.
Well, I agree with you, Rodrigo, because if you look at it, I think as the technologies become a little bit more developed and hopefully a little bit cheaper, you talked about mining. I mean, whenever you look at a mining project, one of the first things investors will ask you is, do you have infrastructure nearby? Do you have road? Do you have electricity? Like all those things are the things that cost like a lot of money to put in. Getting the ore out of the ground is only part of it. And so if you could have access to power for a long period of time, the lifetime of the mine in a lot of cases, that could be a complete change of the economics, right? Even if it were a little bit more expensive.
Yeah, it would certainly help carbon neutralize the mining operation too.
Absolutely.
So are there any?
Go ahead, Pierre. I think you're up next.
One just quick question. Are there any companies that are actually developing or looking at ways to mine the spent uranium? Or when I say mine, I mean to refine or reuse the spent uranium in effective ways. Is there actually any development going on there?
Well, I mean, these SMRs are working on, technology that would basically use, nuclear, use spent fuel basically as part of their fuel. Um, there's also the potential to use spent fuel in other types of reactors, um, such as, I think they call them fast breeder reactors. It's a little bit above my pay grade. So there are technologies out there, you know, but right now with the problem, of course, these technologies might show up a lot more if uranium was more than $30 a pound. The fact that uranium is sitting at $32 a pound means that it's just cheaper to take it out of the ground. But of course, I don't think we'll be able to do that for too long because outside of, Cameco and Kazatomprom, nobody really produces much uranium at that price.
Right. Maybe we can take that moment to dig into how the uranium markets work and how different they are to sort of typical commodity markets. Can you unpack that for us?
Yeah, no, absolutely. And that's a great thing to talk about because, the uranium market, because it's quite different from copper or, even other commodities that are more on contract, that trade more on contracts than other commodities. But basically uranium, because nuclear power plants have such long lives, between 50 and 80 years, depending, then you need a long-term supply. You can't afford to, most of the cost of a nuclear power plant is building it. When this fuel is actually a small part of the total equation. And so once you got that, nuclear power plant, actually, I think that's one of the bull cases for uranium is once these nuclear power plants are built, it's not an easy decision to shut them off because you spent all the money. That electricity generation that you get from the point that it's built, basically it's a very low cost. And you're just amortizing the price, you're amortizing the cost of the capital cost of the construction. So because of that, nuclear operators really want to have a fixed supply over a long term, usually, kind of 5 to 10 year time frame to make sure that they have that supply of fuel for their plant. Because of that, this commodity cycles, which we see in uranium, tend to be longer lived than other commodities. In other commodities, for example, copper, if the price goes up, well, then, you start producing more copper, more mines come online and, the price goes up. Once the price goes up, demand might stop a little bit. Well, let's substitute copper with something else. Or maybe we'll stop building this and that. Like there's some elasticity there. With uranium, there's not much elasticity there. On the demand side, there's basically no elasticity other than, they shut down the plant, or they don't build them. And so demand is quite you have very high visibility on the demand side. And on the supply side, it actually takes a long time to react. And that's one of the reasons, when prices have been so low for so long, it's very hard to get, first of all, funding. Junior companies have had a pretty good, run in the last year or so. But, before then, they had no ability to raise money or anything like that. And so they can't research projects. But even once they find a project, it'll take them a long time to permit it. And because of the nature of the material, uranium, it takes longer to get all the environmental permits. So basically the cycles from a commodity perspective are a lot longer on the demand side and they're a lot longer on the supply side. And that means the price cycles last double the time almost than in other commodities.
So
next gen,
you're coming a mile away.
Yeah. But it's hard to see it at that time because you have all that bias of, things have been so bad for so long. They're just going to keep going to be bad. And and then when things recover, like they have for the past year, people think, well, now I missed the boat. They can't, it's already up X amount. I can't get in now. But the fact of the matter is, it's still early innings. It's, in my view, there's still a long way to go.
A bit of a dip these last few weeks if you're thinking of adding it to a portfolio.
Absolutely, yeah, no, especially today, and uranium does tend to have some correlation with the other energy prices. Even though I don't think it's really all that, merited in a lot of ways. People treat them as energy shares. So in a day like today, where nothing has really changed fundamentally in the uranium space, but energy is down,
6%.
Oil prices are down $4 or $5. Yeah, then that maybe creates an opportunity to look at uranium shares.
And the futures market is not really an effective way to play this, right? So it is a highly constrained and regulated business in the future side. And then so how do you look to gain access to this? Obviously you're managing the Horizons HURA ETF. And so how have you guys taken the approach on that? There's shares, there's, unit trusts that hold some underlying uranium, there's large cap versus small cap. So how have you sort of put that labyrinth together in order to create something that's investable for people, and why did you do it that way?
Yeah, so when we're looking at an index to kind of track the, we had the idea that we wanted to go with a uranium ETF. I felt like this was a good time for investors to be looking at that space, and so we looked for an index that we could track that would offer that kind of exposure, and I think the Selective Global Pure Play Uranium Index, give that exposure. And what they do is they basically invest in basically uranium stocks for up to kind of 80% of the portfolio, and each name is capped at a certain amount, 20%. So in practice, what that means is you get the two large cap companies, which are Kazatomprom and Cameco, and those are 20%, close to 20% each when initially, and that might change over time as the stocks move. But at each rebalance, it's going to be 20%, and then you have 40% juniors, and those are kind of market cap weighted. And so you'll get names like Denison and NextGen and and a lot of the names that maybe your investors have heard of. And then we'll have the exposure to the physical commodity through, as you mentioned, the companies that hold physical uranium. And right now, that is what used to be UPC, which is just changed to the Sprott Physical Uranium Trust, and the Yellowcake. Now, the one thing with ETFs, or at least the Selective Index, is that as part of their universe, they can't hold trusts. So we're going to have to get rid of the Sprott trust, and we're going to replace that with Yellowcake. So we're still going to have about 20% of exposure to the physical commodity, but it's not going to be exactly the same as it was before. But at the end of the day, what I like about that index is that it gives you kind of 40% large caps, which will kind of survive the cycle. You'll have 40% of more juniors, which some of them will make it, some of them may not make it. But overall, you get more bang for your buck if prices do rise. And then you have 20% allocated to the physical commodity as well.
And where are you seeing the institutional sort of trigger points to, get the animal juices flowing from an institutional investor? Are you seeing that already, or is this largely the domain of early adopting retail investors?
Yeah, that's what. It's a good question. I think that's what makes me, bullish long term. Is institutions haven't really started investing in that space. I don't think, from what I've seen. If you look at all the a lot of the Bay Street research and sell side and whatnot, most of them will cover Cameco, and maybe they'll cover Kazatomprom if you're lucky, and then maybe they'll cover one other name, but they really haven't really focused on the sector in general. Certainly, it's it's a job that's given to the junior analyst if there is a job for that. And it's part of the the oil and gas, the energy sector. So most of the attention is going to go to the oil and gas names, and there's just not that many. There's just not that much that many names that that they really care. And most institutions will buy Cameco because it's the biggest name and it's been around for the longest and it's been around for a few cycles. But if nuclear starts to play a bigger and bigger role in our quest for reducing global emissions, I think that will change. And once we start to see some of that institutional money coming in, that could be helpful for visibility and prices and whatnot.
Yeah, so it sort of strikes me as this is a part of the explore part of a portfolio for people. It is the part that you're early, and so you're expecting a risk reward payoff like that of an early situation or early in this next cycle situation. I think you touched on this sort of earlier in the call too, Nick, is that still pretty early innings in this space. We haven't seen the large institutional flows that would drive sort of meaningful outperformance. And given the sector's relatively small in the context of the value it's providing or has to provide to the demand equation for, providing yellow cake, as it were, to various reactors, that there's a setup here that maybe has an asymmetric form to it, that you can make returns that are potentially outsized for the risk you're taking. And the risk is, granted larger than a well-diversified, a global equity portfolio. It's a fairly narrow sector, but there's some dynamics there that look to put the potential price movement in your favor.
Yeah, I 100% agree with that. I think that, over the last, before a few years ago, I think there was still some uncertainty, especially with Kazatomprom, because they had been, producing all this uranium, keeping prices low because they were, selling in the spot market. And one of the things that's, really changed over and above the demand side, which really started to pick up as more and more attention is being given to ESG factors. But the fact that Kazatomprom is now a public company, that it now is trying to maximize profits as opposed to maximize revenue. Really, that I think that was one of the big changes for the commodity going forward.
Very cool. Are there any sort of unusual threats to the uranium bull cycle, like weird stuff like a thorium reactor becoming popular, replacing, uranium reactors? Is there any kind of weird stuff like that could come out of left field that, you have any insight on?
Yeah. I mean, potentially. I mean, I know thorium reactors is something that comes up, every now and then. The Indian government, I believe, is working on building a thorium reactor. One of the reasons India's been working, but India's been working on thorium for, I believe, like 50 years. They've been working on it for a long time. One of the reasons is because India has got the largest thorium reserves of anyone in the world. And so they don't have much uranium. They don't have any oil. So it makes a lot of sense for them to get this working. And so if anyone could get this working, India has the highest incentive to get that going. And the fact of the matter is it's still experimental. It's a state-funded project. It's been delayed. I believe I'm not sure when it's due to be completed, but it's still kind of experimental. So I think that there's some potential there, but if I think there's also, there's also other technology that could be a threat potentially. Like, there's companies working on nuclear fusion. I mean, that's the holy grail of nuclear power. But the saying goes, 30, it's always 30 years away. It's always the technology of tomorrow. It was the technology of tomorrow 30 years ago, and it's the technology of tomorrow today. So, that's the thing. And that's the same with batteries and wind and solar. There's going to be some advancements, and maybe you could address some of the intermittency issue with better battery power. There's also potentially the threat that we develop much better carbon storage for fossil fuels. If we can do that, then maybe fossil fuels become a little bit easier to and cheaper. What I like about the uranium trade and today is that even if we don't, these plants, like I said earlier, these plants cost so much money to build. Even if we just keep going with what we have now, the risk reward still seems pretty good based on that. So anything you're getting on top of that, I think will contribute to upside. But I think it's, even if nothing changes, it's still an attractive thing to look at, attractive commodity to look at.
One of the if we're talking about maybe dampening of demand, one of the things that I've been discussing with people here locally in the Caribbean is that almost every Caribbean nation has a very specialized workforce for diesel energy, right? So we import diesel, we burn it. And the impetus for a wholesale change of expertise, new personnel, firing and hiring is it's a non-starter, right? Yes, it would be better. Right. Yes, they're all very much about clean energy because they're islands and it's nature, but the political pain of having to do a complete change in infrastructure and expertise is currently too much, right? It would even make sense to grab a modular, what do we call it? The SMRs, put it in there. And that, right now, a lot of the work in Cayman for the energy power plant is replacing these motors that are just getting old. They're constant people and upgrading them. That's gone when you don't have moving parts for your generator, right? So yeah, that's an interesting area that is going to have to be navigated from a political perspective.
I think we might get there easier than you think, and I'll tell you why. Is because you look at China. China is using now nuclear power as basically a diplomatic tool. Through their Belt and Road Initiative, they go to various countries and say, "We'll be your friend, and we'll build a nuclear power plant in your backyard." And they're going to Africa, places where they certainly don't have very much nuclear expertise, and they're going there. We'll build you the plant, we'll staff it, we'll train you, we'll pay for it, and then whenever we need a vote of the UN, make sure you're on our side, right? But yeah. Effectively, the Belt and Road Initiative was a way for China to export their expertise and also take advantage of the fact that they've now built, I'm not sure how many it is in the last several years, but they've built many, many nuclear power plants in the past several years. And so they've reduced their cost dramatically. I mean, one of the big disadvantage that, and why, people keep saying, oh, nuclear is so expensive. That's because we haven't built a plant in like 20 years. We built one at a time, and, they're all different. And so we really haven't had any ability to take advantage of kind of that know-how. Whereas, the Chinese have built 20, 30 plants. They're going to build 20, 30 more. And now they have their own technology. So it really gives them a cost advantage. And then they can go and build them in the world. And I think that will help countries who are looking to get into nuclear with the ability to do that. But I think it's also been a wake-up call for the United States that it's not such a great idea for the United States to be sitting on the sidelines. And so I think they kind of now realize the writing is on the wall, and all this stuff about the American Nuclear Infrastructure Act, all this stuff about the National Uranium Reserve. It's really kind of a wake up call that, and now Biden's talking about his own Belt and Road Initiative. It's really about seeing that China is going to use this to their advantage to gain influence, and they have to do something about it. But all of these things are positive for nuclear demand and uranium demand, no doubt about it.
Are you seeing any extraneous demands from the crypto space in locating around sort of nuclear power plants where there's excess electrons, or that constant flow of electrons, or electrons that can be sort of used in off periods? Is there anything in that space that's developing as the space tries to green its power source?
I gotta say, I mean, I have not seen too much of that. It just seems like all the stuff I read on crypto, they seem to be going into places where it's either super cheap, energy, due to they have extra energy, and places like obviously places like China, but even out in Quebec where they have pretty good rates. I think they've had some crypto activity there. I don't think nuclear is cheap enough to really get you there. The advantage of nuclear is that even though it's a little bit expensive, it's on all the time and you can put it anywhere. I don't think you can really compete with super cheap coal if the coal is right next to you. It's kind of hard, with hydro, if you have if it's right next to you, that's not really where its advantage lies, I don't think, at least not yet.
Yeah.
So within investors' portfolios, as you guys think about portfolio construction, there's, generally speaking, we are very much involved in putting asset allocations of, a wide variety of equities that are and asset classes that are within these large ETFs. This is a very specific area, uranium, or specific index. Like, how should advisors and investors think about allocating to this from a risk management perspective?
I think from a risk management, perspective, it really needs to fit into kind of, the commodity part of your portfolio. And so, kind of maybe in the real asset, what you would consider real assets, stuff that's going to that should do well, in an inflationary environment, but also, really it's going to act like a commodity, and hopefully, amongst all the commodities, it'll be, one of the better plays. So, I think that's how I would look at it. Obviously it's a risky commodity. It's volatile. There's, this is definitely something where you should look at the risk adjusted returns, not just the total returns. But that's how I see it.
The last I checked, there was a 35% fall asset class, right? So you do have to be careful. Look, you get a lot of bang for your buck for sure. Just to make sure that, you are putting it in the right size.
Absolutely. You gotta size it properly for your portfolio. Even within kind of the real asset exposure of your portfolio, obviously you don't want it, should be a portion of that. But I look at what bonds offer today, and inflation looking like it's not low. Definitely I think real assets belong in a portfolio. I think the era of your kind of 60-40 portfolio, that's going to be a tough era for that portfolio. And I think you definitely have to be looking at real asset exposure.
Yeah. And along with that goes the opportunity for rebalancing. We've seen the reflation trade get started and then have a backfire in what lumber, copper, and as we speak today on July 19th, you're starting to see that spread through the energy complex. And so, it's a function of having a diverse array of return vectors coming from different business domains and different bit supply and demand dynamics, which I think we've pointed out that there's a fairly unique set of supply demand factors functioning in the uranium market that is quite different than most of the rest of your portfolio. Although some correlation will occur in liquidity events with other energy areas and stocks. If you think about it from a secular perspective, I think you can see that there is an opportunity, but each investor certainly has to sit and think about their own risks and risk tolerances and objectives and things like that. The funny thing is you often add some of these funny, riskier type non-correlated bets in the portfolio, and your portfolio actually has a lower resulting risk. So something for advisors to continue to think about as they build a full portfolio of a suite of different return and risk vectors that they can build on behalf of clients.
And rebalance in an appropriate schedule to get that rebalance.
Balance is key, especially with highly volatile asset classes.
And absolutely, and definitely in the past year, the uranium index that we track was almost up 100% at one point, and that's an opportunity to rebalance a little bit and still maintain your exposure, but maybe reduce some of the risk.
Well, that's precisely right. Nick, just walk through it. You start with, let's say you had a 5% allocation as a portfolio manager or as an individual investor, as an allocator, and that doubled to 10%. Well, I know you're not going to want to rebalance that.
You don't.
There's a behavioral tax. You don't want to, but you should. And now that reverses. And if we go through a pullback in the energy space, you're going to have another opportunity to rebalance that against your more traditional assets. And in doing so, that actually will often, create a tailwind that'll offset most of the fees for the portfolio from a management fee perspective, whether they be management fee from the advisor or from the underlying.
The other thing that I might want to point out on the kind of risk diversification and whatnot is a lot of commodities are definitely very cyclical and correlated to the economic cycle. So the economy is turning over and copper demand goes down. You build less houses, housing builds go down. There's definitely a lot of same with oil. Less demand for oil when the economy slows down and whatnot. The interesting thing about uranium is it's a little less correlated to that cycle because, the demand for electricity doesn't change as much, and because of the nature of nuclear power plant, you're going to shut down your coal and your natural gas before you shut down the nuclear because nuclear is the cheapest one to run, and so from that cyclicality within the commodity space, it's actually historically has been potentially has the demand profile is less susceptible to
right. So it's more of a secular trend than a cyclical trend.
It's like the Walmart.
Exactly.
Yeah, no, it's
kind of like that. Yes.
You go through an economic contraction and people have to show up at Walmart that are shopping there, and those that were shopping at Target and whatnot, they have to shift down and shop at Walmart. So there's a recession-proof nature to that retailer. So sort of the same thing is as electricity demand comes in, you would shut down more easily shut downable energy production by way of coal and whatnot, and you would continue with your nuclear generation.
Yeah, it's the slowest.
Yeah, exactly. And which doesn't, not to say that obviously we've established a fairly, volatile sector, but it is potentially not as correlated with other commodities as well. So,
Nick, can you talk about, as you're thinking about the macro outlook for uranium, how much time should investors allow for this? So obviously it's not a short-term play, but how far into the future do you envision this macro outlook?
I think that's I think it's going to take years to play out from beginning to end. It took 10 years to get us to where we are today. I mean, it was basically kind of a 9-year, 10-year bear market, and we've only just recently kind of recovered. In order to, get the supply that's going to be required, in order to get that up to where it needs to be, make some potentially new discoveries, get those in production, get those permitted, and that's hoping that everything goes wrong. I mean, that nothing goes wrong. I mean, you look at what created the big spike in uranium prices in 2007. That's when, the Cigar Lake mine was flooded and they couldn't get anything out of it. And that, drove prices bananas. So that, if things go well, it could take a long time, but there's also potential that, there's problems. And, and you have to say it. There's also a potential that we have another accident in some place, and then we're back to where we started. So there's definitely risks, both that could help the price and that could hurt the price. But I think if this is, if the bear market's in any indication, I think the bull market could be a long one.
So I imagine you have both an aggressive outlook and a conservative outlook, or a range of outlooks. What would be the most conservative outlook that you have in terms of where this opportunity can go? You said that a lot of, even without bringing on new nuclear reactors, new plants, the demand
Correct.
is already outstripping supply. So if you assume no new nuclear reactors, no new nukes, nuclear plants, what does the?
Well, I mean, I think you kind of
that
want to look at what's the marginal cost of production for new production to come on, and depending on where you look or whatnot, it probably around $50 a pound seems to be a number that, people would agree, okay, this is a number where we can get new projects online. And if you listen to Cameco's quarterly calls, they're kind of saying, we're not going to want a long-term contract our McArthur River unless we're getting at least our money's worth for that uranium. And they're kind of saying mid-40s, kind of that would be what they would think would be a fair price. And they're kind of the low-cost producer. So I would say that's kind of a good number to think, well, that's pretty good, base case, maybe highly conservative if things, stay the way they are. So I think potential, maybe the market will prove Cameco wrong, but Cameco's, one of the biggest producers in the world. And if they say they're not going to give you that uranium until you pay them that price, you might have to pay that price. And there's just not that many places, to get it from.
Does the geopolitical risk of something like Kazakhstan, Kazatomprom's home base, does that also factor into your outlook at all? Like what happens if?
I agree. I mean, you look at Kazakhstan on the map; it tends to be sandwiched between China and Russia. So these are not the kind of neighbors that you want when you're relying on Kazakhstan for your supply. So I think that's actually a pretty a risk that's not really priced in to the market at all. I think that most people kind of think that things will stay as they are, but I do believe that that's a potential risk in supply. Now, would that be good or bad? I mean, it would be good for uranium prices, but it would certainly be bad for Kazatomprom shares. So, but definitely, I think the geopolitical aspect of uranium is not priced in. I don't think that's priced in. I think that both, like I said, with China trying to gain influence, globally through their Belt and Road Initiative, but also through rising tension. And I don't see us dismantling any more nuclear bombs. So there's there's potential demand there as well. And I for the past until 2013, I think between the 90s and 2013, there was excess uranium coming out of reducing uranium from dismantling nuclear bombs and whatnot, and that was part of the secondary supply that came out every year. It's called I believe there was some. It was, I forget the name of it now, but it was some program to basically help Russia reduce its nuclear arsenal, and that's not been renewed. And now I don't know where they are on their latest start negotiations, but last I heard they hadn't agreed on anything. So there's definitely geopolitical risk, and I hope nothing happens, but that's definitely, there's a reason why the U.S. has decided that they want a nuclear uranium reserve, is because they don't make any in the U.S. anymore, and that has to stop. They need to be able to produce that locally.
I think they've learned in this pandemic that producing locally a little bit is always
absolutely, because you never know when your neighbor is not going to be able to deliver, or you're not going to be able to rely on your on your traditional trade routes. So
one last thing, can you just talk about where uranium prices were historically, where they bought, where they are today?
Well, so historically they've kind of been pretty volatile and kind of all over the map. Like in 2007, they went over $100 a pound. That was around the Cigar Lake flooding event. Then after Fukushima, they came all the way back down. They hit, I believe, close to $15, maybe $18 a pound. So all the way, basically, down over 80% from their highs. And now they've recovered, and they're sitting just above $30 a pound, but still significantly, lower. Now, the one thing that I should mention about the spot price is that it's only a slight indication of where the market is, because most of the market is contracted long-term. So, long-term contracted prices have not been as volatile. They have not gone as high, and they have not been as low. Maybe I think the high was on the contract price, from what I've read, was close, more 80, and on the low side, I'm not too sure where it was, but it certainly wasn't as low as 18 or 20. So though you got to take that volatility with a bit of a grain of salt, but it also potentially, creates buying and selling opportunities if you're looking.
Well, I think we covered the landscape pretty well.
Mm-hmm.
And we have
all right, perfect.
One last question for you, Nick.
One last question. So it's a would you rather question. Would you rather live for a week in the past or live for a week in
I would definitely rather live for a week in the future. I think the future is it's going to be an exciting time. I think that I'm even though we talk about potential volatility and all these problems that we're facing and whatnot, I'm very optimistic. I'm an eternal optimist, and I know that the human spirit always comes up with a good solution to its problems, and I'm optimistic that we'll be able to face all those challenges in the future. So I'd be certainly curious to see what the future looks like.
I love it. An optimistic mathematician.
It's true. It is true.
I love it.
You must be the most popular guy at the cocktail parties that you go.
Or maybe I'm just not that good at math.
Popular
No,
guy.
it could be a bit of both.
Yeah.
I'm with you, man. The ever optimist. I like it.
Yeah. Love it.
Okay.
Well, Nick, thank you so much. Is there anywhere people can find you and follow you? Do you have any?
Sure.
Twitter feed or
I am on. I am on Twitter. If you look up my name, I should pop up at Nick Piquard. And then I also periodically have some blog posts over on our website at Horizons.
Perfect.
I'm not that active on social media, but I will be happy to hear from anyone.
Love it.
Excellent. Well, thanks for your time, Nick. That was really a really awesome deep dive on the sector. Learned a lot.
Appreciate your time. Thanks so much for having me. Really enjoyed it.